Gold has been a store of value for centuries. Civilizations have prized it for its rarity and beauty, from the ancient Egyptians who adorned their pharaohs with gold, to the Romans who minted gold coins. This precious metal has always been a symbol of wealth and power. They have used it as currency, a medium of exchange that transcends borders and cultures. Gold coins were once the backbone of trade, facilitating commerce in bustling markets and across vast empires. Today, gold remains an important investment. It provides stability in a world where financial markets can be unpredictable. Investors turn to gold as a safe haven, a way to preserve their wealth in times of economic uncertainty. It offers a hedge against uncertainty, acting as a buffer against inflation and currency fluctuations. When paper money loses its value, gold retains its worth, making it a reliable store of value. In times of economic turmoil, gold shines. Investors seek its safety, flocking to it when stock markets crash and currencies falter. Its value often rises when other assets decline, providing a sense of security. They trust in its enduring value, knowing that gold has stood the test of time. Unlike stocks or bonds, gold is a tangible asset that you can hold in your hand, a physical representation of wealth. Gold is a tangible asset, not just a number on a screen. Its physical presence provides a sense of security that digital assets cannot match. You can see it, touch it, and know that it holds value. It is not subject to the whims of governments. Unlike paper money, which can be printed at will, gold's supply is limited. This scarcity is one of the reasons it has maintained its value over millennia. It cannot be printed like paper money. Central banks can create more currency, but they cannot create more gold. This makes gold a unique and valuable asset in any economic environment. This makes gold a safe haven, a place where investors can park their money when they are worried about the future. Its value is not tied to any one economy or government, making it a truly global asset. It holds its value when other assets decline. During financial crises, gold often outperforms other investments, providing a cushion against losses and a source of liquidity. This quality makes gold an attractive addition to any portfolio. Diversifying with gold can reduce risk and enhance returns, offering a balance between growth and security. It is a source of stability in an uncertain world. Whether you are an individual investor or a large institution, gold provides a foundation of trust and reliability that few other assets can match. Gold is currently trading near record highs. This surge in price reflects global uncertainty. Inflation is rampant. Interest rates are rising. The US dollar, while still the reserve currency, is facing challenges. Investors are flocking to gold. They see it as a safe haven from the storm. The current economic climate is favorable for gold. Central banks are printing money at unprecedented rates. Governments are racking up massive debts. These policies erode the value of paper money. This makes gold, with its limited supply, even more appealing.
Several economic indicators influence the price of gold. These indicators are crucial in understanding the dynamics of the gold market. They provide insights into how various economic conditions can affect the demand and supply of gold, ultimately impacting its price. By closely monitoring these indicators, investors can make more informed decisions about when to buy or sell gold. Inflation is a key driver. It erodes the purchasing power of money, making each unit of currency less valuable over time. As the cost of goods and services increases, people look for ways to preserve their wealth. Gold, being a tangible asset, is often seen as a safe haven during times of high inflation. This is because it tends to retain its value better than paper currency. When prices rise, the purchasing power of money falls. This phenomenon is known as inflation. As inflation increases, the value of money decreases, leading people to seek alternative stores of value. Gold, with its historical reputation as a hedge against inflation, becomes a preferred choice for many investors. They believe that gold will hold its value better than cash or other financial assets. This makes gold, a real asset, more attractive. Unlike paper currency, gold is a physical commodity that cannot be printed or devalued by government policies. Its scarcity and intrinsic value make it a reliable store of wealth. During periods of economic uncertainty, investors flock to gold as a safe haven, driving up its price. It maintains its value in the face of inflation. Historically, gold has been a reliable store of value, especially during times of economic turmoil. Its ability to retain purchasing power over long periods makes it an attractive investment for those looking to protect their wealth from the eroding effects of inflation. Interest rates also play a role. When central banks set low interest rates, the returns on savings and bonds decrease. This makes non-yielding assets like gold more appealing. Investors are more likely to hold gold when the opportunity cost of not earning interest is low. When interest rates are low, holding gold becomes more attractive. Low interest rates reduce the appeal of interest-bearing assets, such as bonds and savings accounts. As a result, investors turn to gold as an alternative investment, seeking to preserve their wealth in a low-yield environment. It does not yield interest like bonds. However, gold's value lies in its ability to act as a hedge against economic instability. While it may not provide regular income, its price appreciation during times of financial uncertainty can offer significant returns. However, in a low-interest rate environment, the opportunity cost of holding gold is lower. This means that investors are less concerned about missing out on interest income from other investments. Instead, they focus on the potential for gold to appreciate in value, especially during times of economic uncertainty. The US dollar is another important factor. As the world's primary reserve currency, the value of the US dollar has a significant impact on global gold prices. When the dollar strengthens, gold becomes more expensive for buyers using other currencies, potentially reducing demand. Gold is priced in US dollars. This means that fluctuations in the value of the dollar can directly affect the price of gold. A stronger dollar makes gold more expensive for international buyers, while a weaker dollar makes it more affordable. When the dollar weakens, gold becomes cheaper for buyers using other currencies. This increased affordability can lead to higher demand for gold, pushing up its price. Conversely, a stronger dollar can dampen demand and put downward pressure on gold prices. This tends to push up the price of gold. As demand increases, so does the price. Investors around the world closely watch these economic indicators to make informed decisions about their gold investments. Understanding the interplay of these factors can help investors navigate the complexities of the gold market and make strategic investment choices.
Geopolitical events can have a significant impact on gold prices. Tensions between nations, political instability, and wars can all drive up demand for gold. Investors view gold as a safe haven during times of geopolitical uncertainty. For example, the ongoing conflict in Ukraine has led to increased demand for gold. Investors are concerned about the economic fallout from the war. They are turning to gold as a safe haven asset. Similarly, rising tensions between the US and China have also contributed to gold's recent price surge.
Inflows into gold ETFs can significantly impact gold prices. Another factor is investment demand, particularly through gold-backed exchange-traded funds, or ETFs. ETFs allow investors to gain exposure to gold without physically holding the metal. Increased buying by central banks can drive up the price of gold. Central bank demand is one such dynamic. Central banks around the world hold gold as part of their foreign exchange reserves. Apart from economic and geopolitical factors, market dynamics also influence gold prices.
Section 6. Expert predictions. What the analysts say. Analysts at Goldman Sachs remain bullish on gold. They cite persistent inflation as a key driver. They predict that gold prices will reach new all-time highs in the coming year. CPM Group, a commodities research firm, shares this optimism. They believe that central bank buying and safe haven demand will support gold prices. These predictions highlight the positive sentiment surrounding gold. While no one can predict the future with certainty, these expert opinions provide valuable insights for investors.
Section 7. A bullish outlook for gold. The outlook for gold remains positive. Investors and analysts alike are optimistic about the future of this precious metal. Gold has always been seen as a safe haven asset, and in times of economic uncertainty, its appeal only grows stronger. The factors that have driven gold's recent price surge are likely to persist. These include ongoing economic instability, fluctuating currency values, and the ever-present threat of inflation. Analysts believe that these conditions will continue to support higher gold prices. Inflation shows no signs of abating. As the cost of goods and services continues to rise, the purchasing power of money decreases. This makes gold, which tends to hold its value over time, an attractive option for preserving wealth. Central banks continue to print money, injecting liquidity into the financial system. This often leads to currency devaluation, making gold a more stable store of value. Additionally, geopolitical risks are elevated, with conflicts and tensions around the world adding to the uncertainty. All of this bodes well for gold. The metal's price is likely to benefit from these ongoing economic and geopolitical challenges. Investors are increasingly looking to gold as a reliable hedge against these risks. Moreover, gold's safe haven appeal is likely to grow. In times of crisis, investors flock to assets that can provide stability and security. Gold has a long history of being one such asset, and its reputation is well-deserved. The world is facing numerous challenges, from economic downturns to political upheaval and even the impacts of climate change. There are many factors contributing to global instability. These include economic uncertainty, political instability, and climate change. Each of these issues can have a significant impact on financial markets and investor sentiment, driving more people to seek the safety of gold. Investors are increasingly turning to gold as a hedge against these risks. The metal's ability to retain value in the face of adversity makes it an attractive option for those looking to protect their wealth. This will likely sustain demand for gold in the long term. As more investors recognize the benefits of holding gold, its price is expected to remain strong, making it a key component of any diversified investment portfolio.
Section 8. Potential headwinds to consider. While the outlook for gold is generally positive, there are potential headwinds. A significant economic downturn could dampen demand for gold. If inflation is brought under control, the appeal of gold as an inflation hedge may diminish. Additionally, a sudden surge in the US dollar could weigh on gold prices. Changes in investor sentiment could also lead to outflows from gold ETFs, putting downward pressure on prices. However, these headwinds are likely to be temporary. The long-term fundamentals for gold remain strong.
Section 9. Gold, a safe haven for uncertain times. In conclusion, gold has retained its value for centuries. It continues to be a relevant and important investment today. The current global landscape, marked by economic uncertainty and geopolitical risks, has further strengthened gold's appeal as a safe haven asset. While potential headwinds exist, the long-term outlook for gold remains bright. Investors seeking stability and a hedge against uncertainty should consider adding gold to their portfolios. As the world grapples with unprecedented challenges, gold's role as a safe haven is only likely to grow in importance.